awesome advice. And I'm just going to reiterate this point, guys. There's two aspects to the capital that we put at stake here in the market. There's the physical capital, which is the money we have in our account, and there's the mental capital. And right now, you are going to burn a heap ton of mental capital because you're either going to have to spend a lot of time in front of the screens, or else you're going to have sufficiently broad stop losses on all of your positions. And actually, that's going to create issues just in terms of managing it and looking at the market and talking yourself out of transactions and trades all the time. So, look, I don't think I could have put it much better than the way Ash did it. I have a lot of concerns about the market. I think that liquidity is thinning out. I think the banks need to start talking to each other internationally and making sure that they can still do business together. I don't see this as being positive at the moment, the movements that we're having. I think the movements we're having, whilst looking exciting from a trading perspective, and really, guys, this is a momentum market. So you're trading hourly charts across most asset classes right now. And if you're trading stocks, you're trading 30 minutes or even 15-minute bar charts, which is pretty ridiculous when you're trying to make a 30-year investment, right? So it just goes to show the amount of nervousness that's going on in the marketplace. So, and the reason why I say 30 years is because that's what the duration of stock stands at right now. It's still a very long duration. So the point I want to really make about this is that trade the momentum, trade what you see, stick to your methods. And I think I've probably been saying this every single session now for the last 4 or 5 sessions. Process is incredibly important here. But also you've got to do something to maintain your mental discipline as well too, and your mental capital throughout all of this. So it's almost like you have to pick and choose your fights. It looks like you're missing out on loads of things because the market's moving everywhere. But the reality is, if you actually deep dive into any of those markets, a lot of them are all going in the same direction. So when the stock market goes up, everything seems to go up. When the stock market goes down, a lot of things seem to go in that equally opposite direction as well too. Gold possibly is a standout because it seems to move in completely weird directions all the time. But the reality is the markets are heavily driven by emotion and heavily driven by people just doing what they think makes sense at the moment based upon the momentum of the last 30 minutes. Well, that from a trading strategy perspective is not a long-term sustainable. However, the other side of it is right now it's sort of working. So understand what kind of market we're in and what kind of commitment that requires, and be disciplined and get on with it. I don't think now is the time to be putting positions out because it looks like, or it feels like, or I had an intuition that maybe this was going to happen. Unless you see it starting to take place, do not trade. And that's what we were talking about before the break. I'll just give you the highlights of it. My overall view is that financial markets remain compromised because the amount of government bonds available for collateral in the markets is very low, despite the fact that governments are issuing lots of bonds. The sad fact is there's a heap ton of central banks who are promptly buying it off them. That's the last thing anybody really wants. They want to put collateral into the market because a lot of banks are searching for that collateral. And right now, if the central banks are trying to buy it as well too, that just creates more problems. Cash right now is not the issue. Collateral is the issue, and that's causing immense challenges within the operational functioning of the financial markets. And the reason why we're seeing some of these wild swings is because people can't get that collateral. So they start to make weird decisions like closing all of their positions. If you can't get collateral for the trades you've got, you take the trades off. Okay, and that's just simply the way it is, right? And so people will have significant trades on and they'll move the market up and down because liquidity is quite thin, and that's what's taking place as this unfolds. As I reiterated last weekend, I'm a very, very long-term bull of gold. I think gold's going into the 2, 3, possibly even 4,000 over time. That's going to be a rocky road journey. It won't be straight up, and there'll be plenty of opportunity to buy it on retracements as we hit that journey. You've just got to be brave enough to do it. The other thing I'm absolutely convinced about is that inflation is coming back in a big way, and it might not appear that way today, might not appear that way in 2 weeks' time or even in 4 weeks' time, but it's definitely coming back. There's no way the governments will sterilize the amount of money that they're spending on the consumers in 6 months. They'll do it over the course of the next 10 years, and that money is going to find its way into the system, and it will create significant inflation way above the central bank's targets, which they won't care about because their job was to keep people in jobs and not worry too much about the level of prices. We're in a different world. And actually, on that one last topic, sorry, I'll stop talking a second, Paul. But one last thing
We've got a couple
here,
of questions for you when you're done, Julian. So keep going.
Okay.
I've got a couple more questions for you.
So the role of central banks through the course of the last 200 years has been really clear. The central banks come into the marketplace when there's a crisis and they provide liquidity into that crisis. They don't provide it at 1% or at 0 or at -4. They provide it at 12, right? What they want to do is they want to say, look, we're here as the backstop and we're going to charge you for it and we're going to make money out of that, right? We have a different form of central banking that's been taking place for the last 20 to 30 years. And that different form of central banking is keeping the game going and bailing out various financial institutions in order to make sure that the Wall Streets keep going, right? Much to the chagrin of all of the Main Street and also a lot of consumers as well too. Well, this time they've reached directly to their consumers and bypassed the banks. Neither of those two situations is optimal, and in my humble solves the problem that we have, which is a collateral problem. The central banks need to actually take a step back, let the governments issue lots and lots and lots of debt, and solve the collateral problem that is all over the financial markets right now. And in doing that, then the central banks can take a step back and they'll actually pick up the pieces afterwards at a slightly better interest rate. So there's, I think for me right now, the uncertainty created by the various things that are going on in the financial markets maybe means that you've got to be a short-term momentum player. And I'll finish there.
Cheers, man. A couple of questions for you. You've been in the financial markets now. You're our longest active trader, in the high 20 years. I think it's 26, 27 years. Have you seen this market before?
Yeah, I've seen similar markets like this before a few times in my time. Both times, both times that stick in my head when you ask me, have I seen this? Probably the last 3 times when I've seen it. What's happened is I've compressed my timeframes down completely. It wasn't unusual, you know. I'm really comfortable trading daily timeframes. It wasn't unusual in those previous periods for me looking at a 15-minute bar chart for clarity. And I think that's the key thing. What happens is decision making is totally compressed, and it's compressed into a very short time frame. You know, those technical setups that you're looking for, they seem to set themselves up on much shorter time frames than they ever used to, and that's a function of volatility. And so, yeah, I've seen this before. This isn't unusual, but the scale of what's going on and the way they're trying to solve it is obviously pretty exceptional. It's like a wartime market, which no, I haven't seen. I might have been around a while, but I haven't been around that long.
I like the word clarity, Julian. This is about getting to a place. I was sharing we're having gosh, guys, this is a trading show on the market. We won't be talking about particular brokers, and we won't be talking about particular things outside of what's coming in the market this week. We'll deal with the other stuff inside the broadcast group, Factions 12 after that. Julian, we're seeing some pretty big swings. What we are seeing, it was really interesting. We've talked consistently as a group about control your risk and push your stop losses a little bit, and yet last week we had people break our risk rules and get smashed up, and people follow our risk rules and make money. And it's really tempting in these markets to break the risk rules, but boy, you can get hurt quickly if you do, right?
Yeah, look, I think, you know, if people believe that they have an idea about what's going on and they decide to fight an uptrend by selling it or fight a downtrend by buying it, then you better be pretty sure of the rationale behind that. You know, just doing it because it feels like, or you have an intuition, or it looks like, and you've been trading for 18 months. You know, guys, if you were trading back in 08, in all, you know, due respect, if you were trading back in 08, you'd have an idea of what happened. I recall a weekend where the Aussie dollar lost 10 big figures over the weekend. And so we're talking 55 to or 65 to 55 over the weekend. And I remember going back into, sorry, this is story time, Paul. I remember going back into the office on Monday morning. I was actually long of Aussie, and I was down 10 big figures on the trade. And my risk manager said, I've never seen anything like this. This is like 10 standard deviations. I'm going, yeah, it's lucky we had 10 standard deviations dollar yen, and I was also short of that, and I made a ton of money in that one. So it's almost like there was a complete, it was just chaos trying to make sense of any positions that you took. Taking positions over weekends, even though they were small, didn't make a huge amount of sense. But, you know, this is the type of thing which happens from time to time. Understanding that you're going to make colossal mistakes. You're going to make amazing trades. You're going to either be a genius or an idiot. It's a fantastic way of um, really proving that sometimes trading can be a little random. And then what happens is the market will settle down, and all of the systems and the processes and the trading methodologies you have will then come back into line again very quickly on your chosen time frame. So this is just one of those things where you just wear through it and just experience the volatility for what it is, which is an opportunity as well as a massive risk as well too.
Now, as many of you guys know, I'm going to suggest to you guys to be pretty careful about gold. I don't think we should be entering any new positions on gold at the moment. With the gold producers in Switzerland being closed down as part of the lockdown over there, gold spreads have shot out, an exceptional amount. So we're looking at spreads on gold at the moment of around $22. That's so $2.20 at the moment. Still out a fair chunk, and they were out a lot last week. So I would ask you guys to be careful about entering gold trades at the moment. You do need to have a lot more. You need to have some pretty big. You can't be trading gold on any short-term time frames with spreads out where they are. Okay, I think that's cool, Julian. We missed a bit of the stuff on YouTube earlier. We went to we went to the wrong YouTube channel and stream. We seem to have two, so we're on the right one now, and I think we covered that stuff enough for guys to catch up as well. Got a few questions. What's it meant by collateral?
So collateral is the instruments that you have to put up when you put a position on. So if I buy gold, great example, right? If I buy gold and somebody sells it to me, then somewhere online, one of us has to put up collateral to guarantee that trade, right? So if you're selling gold to me, the person that's the exchange that's managing that will probably want to see that gold before it will allow you to sell it in the first place. That's what collateral is. It's the same thing as you see it in many different walks of life, right? So you have to be able to justify what you're doing behind any trade. So if you're selling coffee as a coffee producer, you got to make sure you got the coffee to be able to deliver against that contract. It's exactly the same principle in finance as well too. Just in this case, they require you to have government bonds as the collateral rather than having a bag of coffee or a bag of sugar. And so if you can't find those government bonds because they aren't around, then what you have to do is to not take that trade in the first place. You have to unwind that trade, and that's what's causing some of the dislocation right now, is the fact that people, they can't find the collateral they need, and that's what's causing issues in the underlying government bond markets. I hope that makes sense. I explained that well enough.
Cheers, Julian. Thank you for that. And at the end of the day, one of the things that, we're not psychics, exactly how this is going to affect the market. I've got a question here about oil, and I've got a question whether oil is going to go to $8 or $10. I was just talking about in the other show, other call about buying it. And I'll read this because it's, someone works in the industry a little bit. Almost, at least 50% of the airlines will shut down worldwide by May, June, and the amount of vehicles on the street have dropped significantly, right? The border started rolling on the shutdown of business, and major freight forwarders are affected, and a lot of the aviation original equipment manufacturers have started sending out force majeure under their contractual requirements to customers, and in turn, the third management parties are doing the same to airlines. What are the probability of oil dropping to 10 or 8 or even $8? Knowing that oil companies are pumping like crazy and the demand should have dropped and will be super low, there'll be lots of stockpile till the virus is sorted out. There's a major top formula over the past few years, and now it's hitting H. I'm not what H is. CPIC below price chart. I'm looking at this monthly. What is your overall view on it? Look, I might, rather than put this through the team, oh gosh, is it investors in bonds or money markets? Is it safe to invest in bonds or money markets now? Look, I'm going to say a couple of things here, and the team can feel free to jump in. One of the things that we feel right now is that anything is possible, and it's why we're talking about controlling risk, because this market could go anywhere in a heck of a hurry. And really, there's issues about liquidity and in the markets. There's issues about the amount of US dollars in the world right now. There's a number of things going on with the intervention from the central banks is the right intervention. We've got coronavirus going into big markets. There's a lot of stuff, and there's a lot of stuff that could change very, very quickly. So if you're going to ask me if something's possible, I'm going to say anything's possible. I like to think that gold can't go below 8. Well, not can't. And never in trading. Anyone that uses words like can't, never listen to them. Anything can happen in the world of trading, but I think it's unlikely gold will go much below oil will go much below $8, because that's production cost for the Saudis, and Just not quite sure why. If if
I
they
don't
can't
think
produce it
that
at a profit.
oil. I'm pretty confident, Paul, saying that oil can't go below zero.
Yep, and that's we talked about that last week. We talked about an oil trade last week based around that. There may be some. If you believe that oil's falling, you'd structure that trade differently, and you'd buy a very small amount, and you'd sort of scale it up as you went down the levels. I might talk about that a little bit later on. We'll see how we go. Personally, I think that until the infection rate in America starts to show signs of peaking, it's hard to see sustainable growth in markets. I'll be overall biased short. I still like the oil trade long, but I'll be changing the structure of that after some discussion today. But overall, again, team, you want to jump in on any of this before we go around any further? Julian, anything extra for you to add on this?
Yeah, look, I'll just share one last piece of analytical work that I have been looking at, is that after the first 10 deaths, most of the countries that seem to have the large numbers of cases, things stabilize between 30 and 33 days from that first 10 deaths. So I don't know whether people want to use that as a baseline model, but it might be worthwhile thinking about.
It's look, we can't turn this into a Q&A question for different people. There's some stuff you just need to Google and ask us in other shows. As Actions to Wealth, it's a YouTube show for anyone in the world to listen to. If you want to talk to us about some of the more specific stuff, jump into one of the shows during the week and ask some questions, that kind of stuff. But you can also Google some of this stuff. I can't stay forever on it. There'll be people from around the world listening to this that need other stuff than direct Actions to Wealth stuff.
Yeah, Paul, there as well too from I think Chris has asked, is the S&P seem to bounce back, will it fall again? Well, Chris, if I knew exactly what was going to happen, then I'd probably be very rich. The answer is you trade it as you see it. And the last one is that thing about, is it safe to invest in bonds or money market at the moment? I don't know. I can't answer that because none of us are registered financial advisors, and I don't know who you are or where you're attending from. I think you've got to make your own decisions around that. I suspect you need to do a little bit more work on that than you used to have to do a while ago.
Look, I think, to answer your questions right now, is anything completely safe? Unlikely. As Julian said, you need to do some research, and we're a show about talking about, what's happening in the market, and we can't get into too much answering direct questions about what you should individually do. In fact, it's basically illegal for us to do it anyway, so we wouldn't be doing it. We don't do it anyway. We're trying to keep a general overview on the market. I understand out there that people are edgy and they're looking for a lot of very precise answers, but this is a YouTube show about talking about financial markets in the big picture. We're trying to give you a macro view of a lot of stuff and not get into too much of this sort of detailed stuff in this show. And I appreciate your questions and I appreciate people are desperate, but just the wrong format for some of this stuff to get answered by us at this stage. It's likely we'll have Julian online doing something with us in the next couple of months. I think he's doing something booked already. He might do a bit more, give you guys a chance to have a Q&A with him if you are with Actions to Wealth. But I do want to keep moving it along. So we have heard from Ash, we have heard from Julian, we are due to hear from Ainsley. Ainsley, what do you got for us? You're the oil.
Oh, yeah, sorry about the moaning and groaning, but yeah, oil's been tough. Sorry, I've got my assistant here in the background. Everything that I thought 2 weeks ago, where I had thought that Russia and Saudi would put a deal together and sort their differences out regarding production restriction, didn't happen. I see one of the biggest benefactors of this dispute obviously is going to be China, with the humming and whirring of manufacturing starting to wind back up again as they come out through the other side, so they claim. I could see China really a good play at the moment, taking advantage of one of their biggest expenses with manufacturing to really take advantage of the situation. There was a commentary over the weekend, I think it was in Bloomberg, and they were just saying China stands to come out of this through the other side of this pandemic a lot stronger than they were going in. All their expenses are going to be right down. There's a glut of oil, oil's cheap for them, and away they go. So because they seem to be the first to be copped really hard with this, and then they're going to be the first to come out of this on the other side, yeah, who knows where they're going to go. But if they can pick up their production, at least get some things underway, that will take a bit of a sting out of the supply. How much? Well, they're the biggest consumer, aren't they, of oil? So I'm not in the guessing game of where oil price-wise is going to go. Canadian oil hit an all-time ever recorded low of $4.58 a barrel on Friday. Theirs is very different, but that was Canadian oil. So also a fairly hefty producer. And so there is no guidebook on this. There is, who knows, and it does scare me a lot. In that regard, if being a technical analyst, I like to rely on things that I see on a technical chart, and I have a little bit of comfort in seeing a setup that I'm used to seeing, backed with what's happening fundamentally as well. That's my way of analysing the charts, but none of that is possible. So not sure what just happened there. Okay. Are you still there, Paul?
Sorry, Ainsley, I was muted. S has just stopped sharing a screen. You can grab the screen if you'd like to.
Oh, okay. Could you throw up a screen for me, please? Do you have one handy? Just
Yeah.
on gold, that would be really good.
No problems on gold. Gosh, what have I done with it?
Thank you. I was talking oil, but I just can't. I'm struggling looking at an oil chart at the moment. It's ugly. Sorry, I was just talking and went to a very blank screen there. So the other trade that I'm in comfortably at the moment, gold.
This is gold daily I've just done.
Yeah, thanks. So after having a really nice run up on gold in January and February, I rode some of that gold back down again, but I am long gold again. I was in around 1,500 odd. And if anybody's traded gold this week, it's been quite interesting. Julian's gone into gold quite a bit, but I am in gold as well. But I actually had on one of my brokers, they halted trading. They just suspended trading, stopped it, couldn't add to it. You could close it if you wanted to, but they just suspended trading. Simple as that.
We've seen multiple brokers with multiple issues with gold this week, right? We've seen spikes on a variety of brokers, no spikes on a variety of brokers. We've seen spreads that have got incredibly wide. We've seen, gold's just been all over the place with different brokers as we've worked through the week, right? It's just the lack of the problems with the lack of producers right now is affecting the market quite drastically.
Producers, people, as Julian explained, delivering collateral, delivering the goods. We're seeing this also in the gold market as well. So options expire, and people are meant to be delivered a gold bar if that's where their choice is. And in the US, they use different sizing on gold compared to, so with the lack of planes flying, they can't fly gold in as easily as they used to. People are hoarding gold. Secondly, and once the gold has actually made it back to the States, they use different sizes. So they're actually meant to use a refinery to have the gold melted down and put into the right size. Guess what? The refineries are all shut. So people aren't delivering as well on contracts. So here we have a situation where you've got a further overlying problem with the supply and demand of gold. So as Julian said, 2,000, 3,000, 4,000, not next week. Hey, that would be really nice, and I might consider retiring, Paul. But
nice.
Yeah, where that'll go to, how that will actually pan out in the market, don't know. I mean, look at the last 3 days of last week. It was just top end of the week. It was cheering. I was really happy. And then the last couple of days of the week, I was just like, oh my God. Yeah. So between gold and oil, I'm having an interesting time. I took a nice dollar yen short last week, but again, Ash touched on it before. It's just the volatility, and it's just it's not like trading normally. And you're looking at the charts, and you're just not sure what's going to come next. I was down on an hourly chart. Anybody who knows I don't like getting down on hourly charts, but I was down on an hourly chart looking for a good entry on dollar yen. Now, I went in at what was I, $1.10 or $1.11 or something. It was somewhere around that 111. Sorry, not $1.10, wrong one. 111, 110, and it's okay. But it's not to say just. I won't call it anxiety. It's just a bit of a nervousness that I've not had in the market before trading this market. So for newer traders, oh, for God's sake, please be careful. Is all I can say with that.
Yeah, look, it's interesting. As I said, I think we've given out, I don't know, it's into the teens of checks of okay in the last few days, and it's nice to see that. But the guys who are losing are breaking the rules and getting smashed. And I really encourage you guys. This is if you want to be a long-term financial trader, you're gonna face. There'll be a time in the next 5 years where you'd look back at this time and go, gosh, where's that volatility? Where is some volatility? When will this market move? Daily ranges are down to 25. How can I make any money with daily ranges down to 25? And the answer is you can when they're down there, and you can when you're up here, but you do need to be. You can perhaps afford to be more aggressive when daily ranges are shrinking. When daily ranges are growing off the charts, you just need to be more conservative and more careful. And look, one of the things with this, these markets have fallen a long, long way, and they're going to go back over the next, maybe it's 2 months, maybe it's 2 years, maybe I don't know how long it is. But on the way back, there's going to be some unbelievable one-sided markets, an opportunity to make a lot of money. And in this market, you need to hold your risk, be careful, stay in the game. I've said this recently, and Justin talked about this in the talk call earlier on, that in this market, if you can go 50-50 winners and losers, you should make money because your winners should be bigger. This is a market where I think if you can go 40-60 winners and losers, you should make money in this market, because when you win, you should be getting big winners, because this is a market where we're getting legs like this and legs like this, and those kind of legs should be giving you opportunity. Nice solid down, big aggressive day, big aggressive day, big aggressive day, big aggressive run down, big aggressive run up, and gold's not the best of them. If you can be in the market in these times and hold your stop loss and be conservative, and when you get the ride, take the ride. Don't panic and jump out of it. Then when you pick up winners, you'll pick up big winners, and that's what you're looking for. And if you get knocked over a couple of times getting into it doesn't really matter, right? What you can't be doing is, the guys that were short gold this week at 5 times risk, it's insane and not okay. Yeah, not okay. Expensive.
No, that's not okay.
And there's only so much that we'll wear, guys. It's just not okay. So Ainsley, at the moment, it's what?
Yeah.
Yeah.
I was going to say, just getting into gold for me, and when I saw that down the bottom there, bullish engulfing bar right down the bottom, bouncing off support, and I was trying to get in. I think I was in and out 4 times. I got bumped in and out because it was just moving around so wildly. It was my 5th trade in. But I mean, I was careful. The risk was small, and as soon as I could, because I saw the volatility, I was bringing it up to break even. Didn't care. It did take me 5 times to get in, but it wasn't 5 times risk just to try and get in. It was watching the market, getting bumped around because it was volatile in that area, and it was a change of direction. And then I got in on the 5th trade, and it's coming home. But yeah. You've got to watch it, and you've got to watch your risk. It will eat you up. Main objective of any trader is capital preservation. Main objective.
I want to just say what I said earlier, if a few minutes ago again. I expect that the stock markets will go back to put in all-time highs at some stage in the next few years. And the run up to it will be some of the easiest trading you're ever going to see. We're going to see the same thing with some of the currencies, with particularly at the moment, this is US dollar led. US dollar strength and now US dollar weakness, and they'll come into play in strong amounts and give us nice long runs and chances to make lots of money without the need for quite so much volatility as, you know, as the stuff beds in, if you like. There'll be decisions from the market as to which Reserve Bank got it right and which country's going to recover the quickest. And you'll see those markets strengthen, and they'll strengthen over time. And this is why trading's good. You don't have to make your money tomorrow. You can make your money over the next 12 months. Is that you, Ainsley?
That's me. But yeah, be careful out there. Enjoy it because you don't see that this very often. But excuse me. But and enjoy it. It's a big learning experience, and but be careful.
It's brilliant trading. It's great fun, and you know, if you can stay emotionally calm, and you know, some of the messages we're getting at the moment, you know, gosh almighty, guys, just stay calm. If you can stay calm and make good decisions, this is a great market to trade. If you want to try and live on the emotional roller coaster of I won, I lost, and you know what it is, you know, it's like, it's just part of human nature. I won, I'm a genius. I lost, the market's cheating me. If you can stay off that emotional roller coaster and just make good decisions, you'll find your way out of here in a really good place, like a really good place. But just stay calm. You know, just keep working away at it. And you know, the $5 trillion currency market doesn't hate you. It's not picking on you today. It's just doing what it's doing, and it's whether you can get in sync with it or not. And you know, a couple of key words today: clarity, control of risk. These are the things we're looking for. Jeff, I'm really looking forward to your session today. You with us?
Yes, I am, mate. I'll add a few words to that. Pick your target, keep your spread, keep your stops wide, and reduce your risk. They're the ones that I'm concentrating on. But more than anything, it's still structures for me, and they're working well. Actually, Paul, it reminds me of Racy. You remember Racy?
John, I don't even want to answer.
When you were a younger man and thought
back in the 1920s,
when it was spring and thoughts turned to amorous thoughts, and
what are we doing with this, Jeff?
I was going to say, Jeff, where are you going with this?
Some girls will, some girls won't.
Okay, no.
That was Racy, right? Remember Racy? Now you do.
No,
don't you?
no. Anyway, charts. I want to talk about charts, Jeff.
Actually, by the way, that was Shawadi Wadi that did that song.
Oh, was it? I thought it was Racy.
I thought it was Shawadi Wadi. Yeah, I'm not sure that's how you pronounce that either, but anyway, given that we're live on YouTube and not having a bourbon sitting around.
Well, I would have Googled and played it, actually.
Some will and some won't. But actually, what I want to talk about is this.
Yes,
go. We've talked a lot in the last year about getting a bias and understanding that bias, and then, you know, picking 2 or 3 currencies you have a clear bias on and trading those and taking the most out of it. We've talked a lot in the last 2 or 3 months about this market and how it's affected by this and how it's affected by that. And while we've done it, you've just looked at charts and taken the technicals, and you've been right a lot of times, haven't you?
Well, nothing's changed, Paul.
Just stick to the fundamentals overall. This market's actually quite a normal market fundamentally, right? Technically. If you say technically, it's quite a normal market, right?
Yes, I believe so. But you've got to pick your target. As I said before, it's not a normal market in things like gold, in things like oil, in things like.
So if we
I'm actually going to say anything against the US dollar
all about. This about what? The US dollar?
Yes. If it's all about the US dollar at the moment, oil and gold, and I'll go along with all of that, then I think if you steer clear of those 3 things and trade technically, you'll be doing okay.
There's some insight for people listening. And honestly, guys, I don't think you should be trading gold right now unless you're a professional trader. Unless you have a bloody decent sized account to sit and some time to sit in these spreads, because these are big spreads. Oil, you know, it looks like there's a consensus of oil is going to drop. I think oil is a buy. It's just a matter of when oil is a buy, and timing's the key. And you know, I was probably going to buy on Monday. I think I might be buying a bit later on, or buying a lot smaller than I was going to. I'm happy to buy and have it fall. That's the thing. What I don't want to do is miss the Saudi-Russia deal and not be in the market. So stay away from US dollar, stay away from oil, stay away from gold, get on the crosses and technically trade them, because they're reacting to each other the way they've always reacted to each other.
I believe so. Saying, right? Yeah, that's what I'm saying.
Show us some charts, mate.
But there's another thing I'll say.
Don't play any more music, so I don't need another warning from YouTube.
I'm not. Well, that's why it was my voice and not Racy or Huber. What was the other group?
I've forgotten now.
I'm trying to share. It's not letting me. Why is
Do
that?
we need to have someone unshare? I'll stop sharing. Will that help?
Yeah,
There you go.
that will help. Okay, now I can, just like Racy.
Bay City Rollers.
Bay City Rollers. Wow. Okay, thanks, mate. Gee whiz, how easily you forget and how quickly you forget. The whole
Look,
point,
I'm going to say
Paul,
thanks, mate, to anyone that doesn't bring that song up again in the show. Let's move along.
all right. Well, I'll bring the premise of the statement to fore. And the premise is that some trades have and some trades haven't. And you touched on it earlier. If you're getting 50-50 at the moment, you're probably doing okay. If you're getting better than that, you're probably following exactly the structures that you need to follow. And I've said this for the last 3 weeks. The structures are working and they're working just fine for me, but not all of them are. Now, if 100% were, obviously we'd be cheering all the way to the bank. I'm not sure how long the banks will last, but that's another subject. Ash spoke about euro pound on Thursday. We managed to find a way in here, but it's a perfect structure. You've got a descending triangle. You've got a lower high coming off the weekly pivot. Why wouldn't you want to trade that? It's perfectly structurally sound, and technically you've just got to trade that bar, I would imagine.
I'm going to jump into a little bit of this for you, Jeff. For the new traders, and there's always new traders, and I'm not sure I'm going to get. Got a great email from one of your clients, one of the guys trading Slingshot this week. So pleased. I'm not sure he's in the room, but if you're in the room, Jesse, I was rapt to read that email. It's awesome stuff. I'm pleased you're doing so well. I think he's up 300 pips trading the Slingshot, and
Nice.
it's great when guys find the right things. But you didn't just say, "Hey, look, this is a downtrend. I sold it." You said this is a descending triangle, bouncing off monthly pivot, which is a strong level, with a lower high.
Yes.
So this isn't so trading isn't about seeing one thing. What's more, you get some pretty good bar patterns as well along the way. You've got a bar pattern entry always. So you've got 4 different parts that make this up for you, right?
At least. And then, if you add a little bit of the fundamentals and a very strong technical level here that we've bounced off, why wouldn't you want to be trading? I mean, that's a range. I haven't even got the rectangle drawn, but that's another structure that we're looking at here. And it's very clear that if it comes back underneath these highs, then, well, sorry, I should never say that. There's no such thing as clear. It's clear to some people, but not to others. But if you see a bounce off a very strong, and I'm on a weekly chart here, off a very strong level, then, to my mind, you're probably looking at a way into that bounce, I guess, or once it's happened, even better.
One of the points that I'm making, Jeff, is that I think what happens to new traders is they see one thing and they get excited, whereas trading is about letting the picture build.
Well,
right?
we've all done that.
We've done it a million times, haven't we? As part of the learning. And what you learn is if you want to take good trades, you need to let pictures develop. And I started today talking to the trading team about the fact I was going to take a trade on oil, and I think I'm going to let that picture develop a bit more before I get into that trade, having listened to some people today. And letting the picture develop is often a very good thing to do in trading, if you ask me.
Yeah, well, look, we speak about it often, don't we? Patience, and it's the one thing that eludes most traders for the longest time, because they see a potential and they know in their own mind that this is going in that direction. What they can't quite grasp is that you need a little bit more than that, and you need that combination, tick, 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 before you press the button. And I guess that's the message you're trying to get across. And I agree with 100%. You've got to have that reason upon reason upon reason, rather than just, oh, gee, that candle looks interesting. Yeah, let's go. It doesn't work that way. And especially in a market like this, because, wow, look at the euro. I've got to go to the euro. The euro is unbelievable. But look at the structure it's remaining in. It's doing exactly as you would expect it to do over time. The problem is time is like a fraction of a second. And that's the Johnny on the spot thing. If you weren't, on the spot here to get this rally, and I think Julian in particular last week saying, look for rallies on certainly the Comdols, but the euro as well. I wasn't fully on board with that. I thought there was a little bit left in this. But if you look at the structure, and we've spoken about this, week in, week out, where we got in down here and traded up to here and got a real bonus by going through the level. We couldn't get back in till this point, and we traded it back down to here. And I actually left my stops at break even for the third part of the trade. And I really thought that we get another little bounce off the pivots. We didn't. And that's just gone nuts. But where's it gone nuts to? It's gone nuts straight back to the top of the bloody channel, for God's sake. When you look at that, you say, well, how didn't I make money out of that? And I didn't. You kind of get frustrated, and that's what we were talking about before. But unless you're Johnny on the spot and have got a reason to get into the market, yes, we're at the bottom of the, and this is exactly the point you made. Yes, we're at the bottom of the channel. So there's one reason only to get back into here. But I've got no other reason. There's no higher low. There's no ready, set, go. It's just bam, straight back up. So hard to get back in. See how we got a chance to get back in on the way down? We had a buyer bar. That was our chance to get back in. Where's the seller bar here? There's no retracement. So unless you pick the bottom here, which geniuses only can do, or crystal ball holders, you've got no hope of getting back in there. Really, it's just bang, away you go. So that's why I say some trades will and some trades won't at the moment, because the volatility is so incredible. But if you look at
So
the
Jeff, but you're
structures,
saying that some trades some trades give you the opportunity and some trades don't. But
that's
the
right.
structures are holding up, right? If you get out of the dollar and stay on the crosses, the structures are holding up.
Absolutely true. And it's not only on bigger time frames, it's also on 4-hour time frames, where we're looking. This is CAD yen, where we're bouncing from the top to the bottom to the top. We've broken out of the top. That signifies a false break like this one. So what are we looking for here? And this will probably be something I'll be looking at tomorrow morning. I love these bars that are, I can't really call them a bullish bar, but they're not. How do you explain that? It's a buying bar, yet it's come off the top. So it's done a lot of work up here, but it's failed to get through that level. What do you call that bar? I mean, I know what I call it. I call it an opportunity. So for me, there's an opportunity here to trade this short already. Weekly pivot won't exist here tomorrow. It'll be somewhere else. And therefore I won't be afraid of trading into that. But I'll be looking at that tomorrow, CAD yen, and thinking there's a selling opportunity right there. Where I put my stops.
It'll be above your bar too, I'd have thought, Jeff. But it'll be above your close, I'd have thought.
Yes, you would think so. Yeah, probably in this vicinity somewhere. But what I'm saying is, here's the key right now, in my humble opinion. There's a bar that I can trade short, but where the hell do I put my stop? Do I put it as I normally would above the bar? Do I wait to see where the weekly pivot is, or do I actually get it right up here above these highs and above that gap that was created 3 weeks ago? That's the question I have to ask myself. And the answer is going to be, if I'm really risk hungry, I put it here. Should I be risk hungry right now? The answer is no. So I've got to be risk averse, and I've got to put it up here somewhere. And that extends the reward, or sorry, it compresses the reward that I'm going to get out of this trade, because I only expect it to go to here. So that risk is going to become, let's say, let's even go to the nth degree and get the entry under the swing and the stop above the swing. You've got 220 pips to make 267 pips. That's the kind of thing that I'm struggling with at the moment. Do I actually want to take that trade? And under normal circumstances, I don't, because it's 1-to-1, and I'm probably going to trade through some resistance or support or whatever the case may be. But I think this is the market where you need to consider those 1-to-1 trades if you do want to trade the market, because the structures are holding, yes, as you said, Paul, but you're not going to get the reward that you expect. The way I'm trading, you're not going to get the reward that you would really expect out of the position that you find yourself in. So where that would be
Cheers,
probably
mate.
a 4-to-1 trade, it now
Well,
becomes a 1 trade.
I just used the trading software to tell us what time where the weekly pivot will be next week. It'll be 77.17.
77.17, so not that far from the close, as you say.
No, yeah. It's good in a
So
way, gives you
there's
quite a
some-
nice little, yeah.
So that makes that a reasonable, technical position to take, I would have thought. And I'll be looking at that tomorrow for sure. So I guess the point is, mate, there are definitely structures about the place, and some will, some won't. This is another one that won't. Dollar yen, there was only one option to get into that for me, and it occurred on an hourly chart. And I'll show it to you. We were so bearish that we couldn't believe it, and I pointed out to all my guys that my version of Three Little Indians was sitting there really, really strongly. I could see that so clearly that I couldn't believe my eyes when I saw it. And then the only opportunity I had to get into this was this one. Coming up through here as a break and retest of that. Actually, the trend line wasn't there. It was more like there. That was the only opportunity I had. And unless I was awake at 3:30 in the morning, then I had no chance of getting into that. And I haven't really had a chance since. So that's the kind of thing. And that's why I brought up Bracey or whoever that band was that sang that song, because some will and some won't. And those that will may not even give you a chance unless you in front of the charts every minute of the day. And we don't recommend that in any way, shape or form. That's kind of it, mate. The structures are still there. They're still holding. They're still producing, and wide stops, small risk, and just go for it if you have those structures in place.
Cheers, mate. I'm going to. Can you stop sharing for a sec?
Sure can.
I am going to share my screen. Look, I talked a bit about the oil trade last week, and I think it's really a matter of timing. And I think for me, right now, I'll talk about WTI. There's a feeling that Brent's a better trade, but I'm going to talk about WTI. Look, I just don't think oil can go to zero, and I think that makes it a potential buy. And the question is where. And one option is to buy it with a stop loss down here somewhere. And if you get stopped out, buy it again with a smaller stop loss, and buy it again with a smaller stop loss until you get down to $2 or $3. And if you do that, you should be able to make a win out of it. And I'll go through the maths of that perhaps next week. If I was doing that, I'd be doing that maybe 1/4% right now to get involved. I'm in the trade, as you guys can see, in a small size on this account. So small position. But I think right now a lot of talk about oil dropping, and the reason to get in now is so that if Russia and the Saudis do a deal, you're in the market for the spike up. And the reason to stay out is because there's a lot of talk about $10, $12, $15. And if it gets down there, the maths compress even more. The closer oil gets to zero, the more you can take on oil with maybe a 4 or 5 trade plan. If you get to $15, you can take it, $15 with a $4 stop loss, then 11 with a $3 stop loss, and then 8 with a $2 stop loss, and 6 with a $1 stop loss. If you really 5, perhaps it's just a little bit too tight. Maybe 15 with a 5, and then from 10 with a 4, and from 6 with a 3. And as you drop your stop loss, you increase your risk toward. So the potential on oil is pretty good. Lots of guys on the show, lots of guys in Singapore, lots of guys from around the world on the YouTube show. It's nice to have your company. One thing I would like to suggest to you guys is that the spike on gold has been taken away by the majority of the brokers that showed it on whatever day it was, Thursday or Friday. Certainly, if you're on Actions 12th account, if you let us know your account number and you were taken out by, we'll get it fixed up. And if you're on a private account, contact your broker and get it fixed up. I don't think I have anything more, guys. look, it's a time for some of the things we've talked about. It's a time to get out of the US dollar potentially and get on the crosses and trust your technical ability. It's a time to look for clarity. It's a time to control your risk. It's a time to understand that you can take 2 or 3 times to get into a trade, given the reward you'll get if you're right. And if you have clarity and get in that controlled risk, you should be able to hang in and manage it. One of the keys to these kind of markets is understanding where to get some money off and where to let it go to. And the more heavily at risk you are, the less you will manage that intellectually as opposed to emotionally. If you trade it emotionally in this market, you'll get smashed up. So if you can control your emotions and control it and trade it intellectually, you'll go really well. Look, great to see so many guys picking up checks this week. I think our guy Padala is getting his applied for his 3rd profit check on the flow this week after maybe in the last 3 and 3 weeks. It's good to see lots of guys making money. It's good to see it going really well. I do encourage you guys to control your risk and to trade really well. And in the meantime, I think we need to remember the way the priorities work in today's world. Priority 1, stay safe. Priority 2, keep your friends and family safe. And priority 3 is trade this market really well. You know, if you do those things, I think life will be okay in a few months, and that's what we're looking for. Cheers, guys. Thanks to the team for joining us. Great to have your company today. For all the attendees, thank you. I do remind you, we are going to try and keep this as a macroeconomic type session. We're doing market analysis. We can't do a one-on-one Q&A with the entire team for any one individual in this show. And we certainly just can't deal with the paranoia about the brokers and that kind of stuff in this show. Thanks to the team for coming in. Thanks to you guys for listening. We do look forward to seeing you next week. Same time. It'll be the same time seeing a little bit different depending on your daylight savings around the world. Thanks for joining us. We'll talk to you guys next week. Thank you.